Hello, everyone. Dan Bird here with the Daily Scan. And it's Friday the 13th. Scary day. The market reflected that mostly. We're going to look at that. And it was kind of a bifurcated market today, actually. Some stocks did really well and other stocks did very poorly. So let's go take a look. First, a disclaimer, I am not a financial advisor. This is for educational purposes only. So you have to understand your own risk profile and trading style and make your own decisions. If you do want to engage a financial advisor, you can go to this website right down here and make sure that they are reputable. So let's take a look at what happened today. On the home page, you can see the market bias ticked down again. It actually would have been even lower than this, except for a couple of interesting things, which I'll show you here in a second. It could have been much lower, actually. If we go over and look at the market bias matrix, this is the website, breakpointtrading.net. There is a free newsletter that comes out every weekend, so you don't need to subscribe to get the free newsletter. I will be doing a Zoom call on Sunday, and I will be sending that Zoom information out to all subscribers probably later tonight or first thing tomorrow morning for the Zoom call on Sunday at 2:30 p.m. So anyone that is a annual or monthly subscriber, monthly actually has a trial, 7-day trial period. So even if you sign up this weekend for the trial, you can still participate in the Zoom call on Sunday if you would like to. So here is the market bias matrix. You can see a lot of red boxes, but there's some green ones down here too, interestingly in commodities. So sometimes the green ones, you think of green as being good, but sometimes they may not be so good. I put everything in here though, because it gives you an overall view of what the market looks like. And in this case, it was oil that was turning green. So let's take a look at oil over here. So you can see right there, it's starting to move higher. So it gave a short-term up signal a couple of days ago. Actually just gave the up signal right there. The next one is WTIC, also has an up signal right there. Now they're all below the 200-day moving average, so it's still pretty far down. Brent trying to come back today as well. Gasoline moving higher too. Not much, and it hasn't really broken out of these previous highs. So something that we need to watch. We don't really want gas and oil to go higher, but it's starting to tick up slightly. And these are the reasons that the market bias matrix didn't actually go down more than it did for today. Natural gas was making a nice run and pulled back significantly today. The other one that I want to show you that I noticed as I was updating this is gold. So here's gold. You can see how symmetrical gold looks. Had a great up move right here, 5 days in a row, and then pulled back. And then we had 3 days in a row, and then a big gap down. 2 gap downs right there, 2 days in a row. So this has not given a short-term sell signal yet, although the medium-term sell signal was given way back here. But if that continues, then gold looks like it might be heading much lower, and the volume is pretty high as well. We'll continue with the gold thesis. So this is gold miners. Gold miners gave a short-term sell signal today. They had started yesterday, hit the 50-day moving average, got rejected significantly. And now it broke below this support line, and the next support line is down here near the bottom. Silver, same thing. Silver looks the same. It now has a island reversal right there. So a gap up, 3 days in a row sideways, and then a gap down. So those two gaps create a little island right there, which is very bearish for silver. And silver miners too, looks the same. So they will give a short-term sell signal might give a short and a medium-term sell signal on Monday, actually. So those were the ones that didn't look too great. You can see them down here in this red. And uranium too was the other one. Uranium gave a medium-term down signal, so it's been heading lower ever since the end of November. Uranium just keeps heading lower as well. So that's one way to use this matrix. You can, even though it's hard to read, you can either download it, you can download the spreadsheet and see it very clearly, and it's updated every day. So you can download it right here. And it has the links right in the spreadsheet too, so you can do the same thing that I'm doing over here, or you can click on the links over here. So we did have also financials gave a short-term down signal too today. If we look at that, that's right there. So financials starting to roll over. And actually, a lot of things kind of look this way. This actually, if this goes back up and comes up as high as this left shoulder, it's going to have a head and shoulders pattern. We'll see if that happens. But if it does, then the measured move for that would be right here at 49.50 up to 51.50. So that's $2. So 47.50, which would be down here below the 50-day moving average. That would be the measured move for that head and shoulders if it occurs. It's not one yet, but if it goes back up to these highs right there and then starts to go down again and breaks below this support line, and all of those things have to happen before it's a true head and shoulders. But if it does, then it's probably going to go down and close this gap down here. That's what I think. So that's financials. Not looking too great. Real estate too, going near the bottom of this Darvis box. So it gave a medium-term down signal today as well. We'll look at each of these. Industrials continues to go lower below the 50-day, below the channel too, by the way, below the trend lines. Materials, where gold is, just significantly lower. It's sitting right on a trend line down below. Energy, same thing, broke out of the channel, heading lower. Healthcare has not looked good for a little while. So all of these sectors just really aren't looking great. Utilities, which had been holding up pretty well previously, but it's getting close to a support line too, might break down. Staples starting to roll over too, sitting right on its 21-day moving average. It has a spinning top doji right there. That's indecision. It goes up, it comes down, and then it ends right where it started the day. So that's indecision. The market doesn't know which way it wants to go with staples. Now we'll get to the aggressive sectors. So there's discretionary, where Tesla is. All the aggressive sectors actually look pretty good still. Here's communication services, which is where the internet stocks are, like Google. I mentioned yesterday that it was a shooting star candle, and that's usually a reversal candle, and it just confirmed today. So this one may be continuing to head lower. We'll talk about that when we look at the daily scan. And finally, technology, just kind of hanging in there. Didn't do much at all today. And sitting right on a number of trend lines. It's got the 21-day down here. It's got this long trend line from August right here. It's got a support line from this high back here. Actually went down and touched that today. And so it has a bearish wedge that was forming. So like I mentioned, bearish wedges sometimes will break through the bottom. And if it does, the measured move is way down here at 198. So we'll watch that and see what happens. But there's a whole bunch of pretty significant support areas right in through here, right around 236, 235, 236. So that's it for the sectors. Let's take a look at the dashboard real quick. The Dow, the only one that was up was the NASDAQ. NASDAQ 100 was up as well significantly. So you can see what's supporting the market right now is the large cap technology stocks. Those are all in the NASDAQ 100. So those hung in there. S&P looks like that. NASDAQ, small caps didn't have a great day. Mid caps didn't have a great day. We'll look at the Russell in a minute. Bonds actually went higher, 30-year higher, 10-year higher. I'll talk about that in a minute from a question that a subscriber had. All of the yields are going higher, except for the 20-year. 20-year is still heading lower. There's the 20-year, went lower today again. And the US dollar is going higher slightly. Commodities, I talked about commodities before. There's gold, that's what it looks like. There's silver, copper is down, oil is up, natural gas is down, gasoline is up, and corn is down. And then crypto, spent a lot of time on crypto yesterday when I went through Bitcoin and how Bitcoin is created. One thing that I didn't explicitly state, but it should be implied, is that as I explained, whenever a block is created in the blockchain for Bitcoin, the person that creates it or the company that creates it is rewarded with more Bitcoin. And right now that reward is 3 1/8. So what that means is Bitcoin miners, that's one way that they get paid. Whenever they create or mine a Bitcoin, that's the reward for mining Bitcoin. So if they create one, they get 3 1/8. Right now, Bitcoin's worth about 101,000, call it 100,000. So that means they get $300,000. If they can create one every month, those Bitcoin miners create one every month, that's $3.6 million per year that they can make. Not bad. So that's the way it works. I didn't explicitly mention how it fits with the miners, but that's basically how it works. So Bitcoin's still hanging in there up near the top. You can see the Dow actually had this is stock charts, trend models. This is where I got the idea. Technology and discretionary at the top, but utilities is too, which is interesting. Those are the only three that gained today. At the bottom is communication services, which is where the internet stocks are. And then for industry groups, automobiles, semiconductors, both of those did well. I'm going to look at semiconductors real quick. So it's trying to make it's right on this trend line right here and starting to go higher. So I mentioned yesterday, there's 3 touches on that resistance. If it goes back up and breaks out, that will be very positive, be very bullish actually, if that breaks out. There are buy orders sitting right above here, and all those buy orders will execute if it breaks out with volume. Today had some pretty good volume, but it didn't do much. It actually pulled back and ended lower than it opened, but still higher for the day. So we'll see if semiconductors can continue that trend. And let's look at Nvidia, because Nvidia didn't do great today. So there's Nvidia. It actually, let's see, 139.62 is the 21, 139.54. So it's only 8 cents away from giving a short-term down signal right there. Actually, that's a medium-term down signal. Sorry, already has a short-term, but it's only 8 cents away from getting a medium-term. And the momentum line is below 0. Long-term MACD is below 0. Money flow, short-term money flow is going up, but the long-term money flow is going down. So Nvidia needs to really help the technology sector. It's normally the leader in the semiconductor space. Semiconductors did fairly well today. You can see it was in the top 10 industries, but here's Nvidia versus its peer group down here. It's below its moving average and heading down to the 0 line. So if it goes below 0, that means it's underperforming its peers. So what that means is there are more other stocks in the semiconductor group that are doing better than Nvidia. And one thing I want to point out on the website under the market bias matrix, where this is where I started the session tonight. And you can actually see over here, the short term is the orange line, the medium term is the gray line, and yellow is long term. You can see the short and medium term, what they look like. Short is crossed over the medium term right back here. So, and we got lots of red up here. So I'll have to continue to watch that. But there's kind of a hidden gem on this page that maybe even subscribers might not know about it if they don't scroll down far enough. But it's the year-to-date gainers and losers, and I update this every week, and I just updated it tonight. So I just wanted to point out a few things on here. First of all, the gainers on the left-hand side, these are the large cap, S&P 500 and NASDAQ 100. Nvidia which is right here, had been in the top position for months and months. This is year to date. And it has now fallen. I think it was number 2 last week. It's now fallen to number 4. Palantir is now moving up. So all three of these, AppLovin is moving up. All three of these are outperforming Nvidia right now, which had been the leader for quite a while. United Airlines is in there. Here's Broadcom, which had a great day today. Marvell, another summit. You can see the semiconductors over here. ARM Holdings, 1, 2, 3 semiconductors right there. And then, of course, Nvidia. So these are starting to move up, and Nvidia is starting to move down. Royal Caribbean is in there, Arista Networks. These are all great names in here. The right-hand side are the losers. So this is year-to-date. Intel is the biggest loser for the whole year, down 50, almost 60% for the year. Moderna, Celanese, Dollar Tree, Enphase Energy, and Renewable Energy Group. DXCM, which is one that some subscribers had asked about. It looked like it was trying to make a recovery, but it is in the bottom 20 of all of these stocks. So it's 500 plus, it's probably about 550 because there's some overlap between these. You know, somewhere around 550 stocks, DXCM is in the bottom 20 of all of those. Boeing is in there, CVS is in there. MongoDB and the software group hasn't been doing too well. And below that are the small caps. And you'll notice on the left-hand side, a lot of these are in our top 10 list. HIMS, ADMA, you know, all of these in all the way down to right here, Coherent. This is year to date, remember. So all of these down to Coherent have all been in the top 10 list at some point. And then the losers over here, again, renewable energy, Solar Edge. So Solar Edge there and Enphase up here in the large caps are the losers. So it's interesting to take a look at these. I mean, you can basically use these names right here if you like to play options. If they're all large caps, so they should have a pretty good volume, and they are all optionable. I believe they should be all optionable. So that's one way to use this. If we go to the charts page, you'll see the top 10 list. And I suspect that this is going to change significantly tomorrow when I update this tomorrow morning. You can see APP AppLovin is right at the top. And you can click, these are relative outperformers. So it has to outperform its own industry, its own peers by 10% or more, and it has to outperform the S&P by 5%. These are the ones that have beat earnings and revenues, top 10. And these are the IBD 50 over here. So again, a good list to use. I consolidate all of these down here. You can download this as a CSV file and import it into your own platform and do your own scans if you want. Or just put it in your platform and buy them if you want to. So anyway, let's look at AppLovin just out of curiosity. So that right there, it's pulling back, but it's right on the 21-day moving average. So this actually might be a good opportunity to buy. We'll see if it ends up on a scan at some point in the near future. Palantir, it's in green because it's in all three lists. It's the only one in all three lists. There's ADMA. That was in the top 20. It's pulled back quite a bit, but still year to date, it's gained quite a bit year to date. All right, so what else did I want to show you guys today? Let's look at one of the stocks that was asked about. It's called TUA, and the question was related to when I was talking about the 10-year. And let's see, how do we want to look at this? Let's look at a long-term chart. So this is, I'll make it a little bit bigger. This is the short-term treasuries, and it is I believe, a 2X ETF. I'm not 100% sure of that, but I think it's a 2X ETF. But anyway, this is short-term treasuries. And they said, you know, you talk about TLT, but have you ever looked at TUA? So here's TUA, T-U-A, short-term treasuries. TLT is the 20-year. So let's try something. Let me put in down here, I'll put in the TLT. We'll choose price and TLT, and we'll make it a line, and we'll make it red. And we'll put it on the price chart. So there it is. So that red line right there in the background, that's TLT. And you can see how it actually lags TUA. So TUA is short-term treasury, so this would kind of make sense. Short-term treasuries seem to roll over a little before the 20-year does. And so you can use it as a proxy if you want to try to get into the 20-year, but they look pretty similar the way that they move. So let's try one more thing. And first, I'm going to actually change the color so it's more apparent. And I'll make it a solid thick line. Oh, sorry. Yeah, it's this one back here. Yeah, actually, it is rolling over before the short term. Sorry, I was looking at the moving average lines. Let me take the moving average lines off there. Let me take all these off. Just look at the price action itself. All right, so TUA is in the background, short-term treasuries. The pink is the 20-year TLT. So you can see TLT started going down even before the short-term did. But they are very similar to each other. They move pretty much in tune with each other. And if I want to smooth that out a little bit, I can actually turn this into invisible right here. This is a little stock chart training. And I can do a simple moving average, 50, let's use a 50-day simple moving average. Let's make it a little quicker. Make it a 21-day simple moving average. All right, so there's a 21-day moving average, and there's the short-term treasury, so you can see they're very, very similar. Now let's try one more thing. Let's put in the 10-year yield. And we'll go here to price again. And in this case, it's TNX is the 10-year yield. I'm going to put it behind price, and we'll make it invisible also. And we'll make a simple moving average of this one, also 21-day. And in this case, we're going to make it, let's make it green. Okay, now what do you see? The polar opposite. So when the 10-year goes down, the short-term treasury TUA goes up, and as does the 20-year. So right now the 10-year is starting to pull back, but so is the short-term treasury, and the TLT is still heading up. And this is a moving average line, so it's going to lag the actual price a little bit. Actually, if I want to make all things equal, I can put in a simple moving average here, make that 21, and we'll make this one pink. And we'll make the actual price invisible. All right, so now we've got everything equal. 21-day moving average for the whole thing. Although I want to make TNX, I'm gonna make TNX red. So it stands out. There we go. Okay, so the green is the 20-year, the pink is the short-term TUA, short-term treasury yields, almost moving in unison with each other. And the red one is the 10-year yield, which goes opposite. So if you want to figure out what your treasuries are doing, the person that asked about TUA, watch the 10-year. So if the 10-year is starting to roll over, this one might be getting ready to go up. And the 20-year might be getting ready to go up as well. If the 10-year just goes sideways, then these are going to go sideways too. But I just wanted to show that, the relationship between those short-term, longer-term, 20-year, and then the 10-year yield right there. 10-year yield really is the key, the most important one to watch. Okay, so I think that's it for right now. But one thing I want to show you that I've just added is on the index charts. I showed this before, but I put the monthly. This is John Carter's monthly squeeze. This is the squeeze indicator that you can find on Thinkorswim. And what you'll notice on a monthly chart back here in November and December of 21, just before we had the bear market of 22, the momentum had already started falling, even though the price was going higher both of those months. In fact, it made an all-time high in December of 21, right at the end of December. But while it was making an all-time high, just like we are doing now, the momentum was going down. But that's not the case right now. Momentum is actually still up there. Now, December is not over yet. So there is a chance that if December just continues going down, that this could actually, momentum could actually turn dark blue. So we won't know till the end of the month. But what I did for the index charts down below is I kind of mirrored this view. These are monthly charts as well. They're 5-year, just like this one is. So if you want to see what this looks like for the NASDAQ 100, I also put the Keltner channel. So it's a 2x ATRs, the gray area, and the dash line is a 3x ATR. So that's 3 times the average range that this moves in 1 month. This is a monthly chart. So if it gets up here like it is right now, you can see what happens. It doesn't stay there usually very long. This has been, the S&P has been up there for quite a while. The Dow hit there and starting to pull back from there. Now remember, this is a monthly chart. Here's the Russell. Russell's still in the 2x, right at the top area of the 2x. Bitcoin is already out of the 3x range. It actually went up to the 4x range. So that's why I say Bitcoin probably is going to rest for a while. And here's gold, also up there. So these are all at extremes. These are extreme levels. That does not mean it can't stay there. It could remain extreme for quite a while. Now, in this case, this is a MACD. This is not the squeeze indicator like this that John Carter created. This is actually a moving average convergence divergence, MACD, that I talked about 3 Tuesdays ago. But I did the same thing for the aggressive sectors. So here are discretionary. You can see it's into the 4x right now. Technology actually has still some more upside that it could move. Communication services is in the 4x, very extreme. Industrials is already pulling back from the 4x level, as is financials. So they are already pulling back from those extreme levels. So this is just a quick way, and don't forget that this is a monthly chart. So this will take quite a while to move, and it really won't, that last bar won't really complete until the end of the month. But you can see right now, discretionary, this is mostly driven by Tesla and Amazon as well, but mostly Tesla. And then if we go to the defensive area, take a look at those. Defensive sectors. Now you can see defensive staples is already pulling back from that 3x level. Utilities hit it up here and pulling back significantly. Healthcare just touched the 3x level up here, and now it's reverted to the mean, the 21-month moving average. Materials, it just about reverted to the mean right there. It only made it to the outer boundary of the 2x level, never made it to the 3x. Same thing with energy. So it's coming back, reverting to the mean, and real estate actually got in between the two, about 2.5x right there. And so just think of these as extreme levels. You can see even when it goes to the bottom, it makes an extreme back here in 2020, it bounces and starts going back up again. So that's what they look like. That's something that I just added to the website or just changed to have it reflect the John Carter view. And this is something that we will continue to visit because I want to see when these bars turn dark blue. That means this long rally is probably getting ready to end when that happens. So we'll keep an eye on that. All right, that's it for today. Just real quick, we can look at the daily scan. As I mentioned yesterday, half of the Google position was stopped out at 190. It's right down here, 10.5% gain. And this is probably what I'm going to do moving forward. If I get a nice gain on some of these, like we did, 13% here, 11, and this 13% is after it pulled back to the stop price. So we could have made probably 20% on these, at least for half the position. So that's something that, again, this is a learning process. This is a way to create a ledger of what you're doing. DTM, I think, pulled back today as well. So it might be heading low. I didn't pull back too much, sitting right on the 21-day moving average. Interestingly, as I've been creating getting ready for the beginning of the year with my dividend stocks, which are really more long-term holds, I noticed that DTM is one of the main gainers for dividend stocks. Right up here, it has almost a 3% yield, and it has done really well this year. So it's ending up near the top of the list on quite a few of those. So I suspect it's probably going to be on the list. So stay tuned for that. I'm probably going to talk about that in between Christmas and New Year's, and I'll put the whole list out on the website on the portfolios page right at the first of the year. So folks can probably before the weekend before the first, maybe I'll put it out there. It'll be on the portfolios page over here. I'll create a separate column down here just for the dividend stocks. I'll probably have 3 versions of it, and with 3 different groups, and you can pick and choose the ones you might like if you want to play it that way. So anyway, that's it for today. Thanks for watching. Have a great weekend, and be careful of Friday the 13th and any black hats that you might run across. Have a great week. Take care.